Good morning, everyone, and welcome to the Daily Trader with Kevin Hinks. I have two paper money trades for you today in two high-profile names. Remember, it's earnings season, so I'm going to make sure you know the dates of the earnings releases that are confirmed as they come out. Two names today, Boeing and Amazon, we're going to look at today. One in the industrial space, one in, let's call it e-commerce. They're also in cloud. They're also in streaming. You know, Amazon is involved in a lot of things. Let's get to our first trade of the day, and that is Boeing. Now, Boeing, first thing you need to know, earnings April 23rd, right? So that will affect the trades that we make. And so I'm looking at a call diagonal in Boeing, buying the May 2nd. That's the week after the earnings event. You always have to know when the earnings event is. And then selling this week's April 11th. I'm buying the 155 strike, selling the 162.5 strike, looking at the move for the rest of the week of about $7.80, almost $8, lining up that short option with that expected move on the upside. So I put that in at about $8.75, trading about $8.60 now, so slightly lower than where we put that in a short time ago. Remember, buying the May 2nd, selling the April 11th, 155, 162.5 call diagonal. This will allow, if you choose to, remember, first thing, this is a bullish trade. If you're not bullish, this was something you would think about if you would be bullish on Boeing going into the earnings. By the way, they announced some deliveries last week, 5,638 plane backlog for Boeing right now. So if you're looking at this from a bullish posture, this is a trade you might want to look at. It's collecting theta. The risk is whatever debit paid, that's the risk on this trade. You're looking for a move up towards the 162.5 strike, and this will give you an opportunity to potentially extend duration into the earnings event week, and then really chipping away at that net debit, and then meanwhile you chip away at the break even. So about $8.75 for the Boeing diagonal. That's the risk on the trade, looking for a move towards the 162 strike. All right, let's get to our second trade of the day, and that is Amazon. We're going to go a little different here in Amazon. We're going to look at a short put vertical. Going out, again, May 6th is the earning date on Amazon, going out to the April 25th. You notice I avoid the earnings event date until the last possible moment, so we're staying ahead of it. Selling a put vertical, the 170, 160 put vertical in the April 25th expiration. Put that in about $1.40. It's trading about $1.25 now. Amazon has rallied off its lows. Do you want to adjust the strikes? Possibly, if you'd like to. Remember, you collect more premium as you move those strikes closer to at the money, but the trade-off, and there always is one, is it's a lower probability of finishing out of the money. So about $1.25 for the short put vertical. The risk on the trade is the width of the strikes, in this case $10 minus whatever credit you take in, okay? So it's $10 minus whatever credit. If it's $1.30, that would be $870. This is a high probability short put vertical that is risk defined and collecting theta. But when you do a high probability put vertical like this, the risk is skewed to the risk side, right? It's $1.25 or 30 versus $8.75 or $8.70 in terms of risk. So two trades today, a long call diagonal and a short put vertical in Amazon, both cognizant of when the earnings event is coming up. That's our show for today, everyone. We'll see you tomorrow with another edition of the Daily Trader. I'm Kevin Hinks.